You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Some days are more exciting. Other days are more educational. Today is Happiness Happens Day. Happiness Happens Day. Okay, so... I don't know that things just happen. Don't you have to really work at it? Make yourself, don't worry, be happy, something along those lines. Happiness happens. Sneak some zucchini into your neighbor's porch day. That's an interesting one. That would be kind of funny when you think about sneaking. I don't know about sneaking. You can't sneak anything anymore. I think some of these might be a little old. How do you sneak something onto your neighbor's porch in this day and age of, not to give any advertisements out, but the camera on the door, the ring doorbell, and cameras in the front yard. Just throw that out there. So I don't know if you're going to sneak anything on there. We do have fun because our neighbors have some young kids, and it is fun watching when they try to play ding dong ditch it, and you catch them on the camera. Just a little fun. I mean, did you ever do that when you were young? We did that a lot, so we had a good time. It's youth mischievousness, I guess is the word. Having beaten anorexia, frozen custard day. Are you a big frozen custard eater? My wife likes yogurt. Can you just give me a little bit of Baskin Robbins, peanut butter and chocolate? Now, I don't know if this is true. Josh, maybe you know this one. I don't know this. I was told that on the 31st day of every month, if there is a 31st day, Baskin Robbins gives a special out on ice creams when you go to Baskin Robbins. I think it's $1 scoop or something like that on the 31st. My son told me that, and, our family is all beaten anorexia, so it wouldn't surprise me if he's accurate. So if you're thinking about a little ice cream, that might be the day to go. And I found this one educational. Today's also National Dollar Day. Now, when I saw this, first thing I thought of from my past life, dollar stores, but no, they're talking about currency. And the date of the first dollar bill? Who was on the first dollar bill? Now, if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you see a picture of a dollar bill, and yes, right there is George Washington. But the question is, who was on the first dollar bill? Salmon P. Chase, President Lincoln's Secretary of the Treasury. Salmon P. Chase was on the first dollar bill. It was not George Washington. So if you're in a bar and you want some useless trivia, there's a little bit of useless trivia for you. Now, the other bills, the larger denominations, well, they've changed designs a little bit, but they haven't changed the design of the $1 bill. You know why? because it's not worth a whole heck of a lot. Inflation has taken over. So some of the other ones, they're interested in counterfeiting. The $1 bill, not so much. Let's move right along and see if we can get a little bit more useless. Oh no, we got serious trivia. We've got serious information here. Dow Jones Industrial Average up 112 points. The S&P 500 is up 10. NASDAQ up 46. Oil up 92 cents per barrel. And the 10-year Treasury is up 11 basis points, 2.78. So we're going to watch all of that for you. There's some serious stuff going on in the world right now, serious stuff in the markets. We did get over the weekend, I'm going to call it what it is. We got the Inflation Creation Bill. The Inflation Creation Bill. Yes, I know that the Democrats want to call it an Inflation Reduction Act. But let's see what they're doing to save us on some inflation numbers. And I want you to be aware because elections do have consequences. And I didn't look it all up. I didn't look up, well, I think I have an idea of the U.S. senators. So we have 2 senators, obviously, in California, like every state has. Our 2 voted. I just want to make sure that you're aware of how these senators are voting, because, you know, it's important to understand these things. How do the senators vote? And, oh, Jody, you got the same situation that we have here in California. Let's see what Josh has over there, because I haven't looked at Josh's lately. Is Josh in the same boat as us here in California? Yep, Josh, you did it too. You've got the same thing. I bet Lori is an outlier. I bet Lori doesn't have to deal with this stuff. Now, Lori's on the right side. So here's the issue. Josh, you got your state senators voted to increase gasoline taxes. That's going to help on inflation. They voted to increase gas tax. Jody's did the same. Ours here in California, you could have guessed that they would vote to increase the gas tax. That was a part of the bill that they just signed over the weekend. It was a marathon session over the weekend that they signed, that the Democrats, it was all on a party line. That's why I don't have to look up each individual very closely. It was all party line. So all the Democrats, they voted that, yeah, we can increase the gas tax. Okay, we got that. Let's see what else they did. I think I've got my notes right here. Where are they? I had my notes. Adding 87,000 IRS agents. Now, there was an amendment proposed by the Republicans saying that they could not audit the new agents couldn't audit anybody that earned under $400,000. Yeah, well, you could probably guess. The senators from California, Nevada, Arizona, they all voted against that. So they're telling us that this bill is only to go after the rich. Well, 87,000 agents, and I did a little bit of research. It's here in here somewhere, that there are a total of 89,000 Americans or people in the U.S. that have a net worth of over $50 million. So they got one IRS agent for every one of those, if they're sticking to what they're saying, they're only going after the wealthy. There's only 788 billionaires. So that's part of it. The IRS will be larger than the Pentagon, Department of State, FBI, and Border Control combined. That's part of the Inflation Reduction Act, or Inflation Creation Act, as I call it. So much for manufacturing. Although Senator Manchin, yeah, he got his $6.5 billion for his natural gas pipeline. And Senator Sinema, she got her $5 billion on another bogus thing. So now let me ask you this. If you are one of the lucky few, and I know I'm going over here a little bit, Josh, I got to get off my soapbox here in a minute. I'll get there. $369 billion on energy and climate reforms. What does that mean? $300 billion in green loan guarantees. So that means if you're a fan or a friend of Joe Biden, you go and apply for a green loan guarantee, then you go out of business. Can you say Solyndra? $300 billion for that. $80 billion to double the number of IRS agents. $60 billion for environmental justice initiatives. $9 billion in tax credits for wealthy families to buy electric cars. It's not the working class folks that are out there buying the electric car. $2.6 billion to conserve coastal habitats, $1.5 billion to plant trees. That's what's in this bill. That's going to create more taxes for you and for me. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, VA loans 101. We're going to talk about eligibility today, why the Forbearance Program changed the housing market, and should you buy a house with high mortgage rates? All that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio, and if you miss any part of our broadcast. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva, they've got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Looks like the markets are going back the other way again. The S&P 500 now down 0.35, so it's basically flat, a little bit below the line right there. The 10-year Treasury down 6 basis points, 2.775 right now. Mortgage-backed securities are up 23 basis points. Means interest rates are down a little bit. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual lock rates with consumers across 35% of all mortgage transactions nationwide. So let's see what the loans actually locked at last week. Now, you will recall, if you were listening to us, if you saw the news on Friday, you'll recall that every Thursday morning, we get the numbers from Freddie Mac. They tell us what interest rates are. Last week, 4.99% is what Freddie Mac said, but OBMMI tells us that they locked at 5.452, up 12 basis points. 30-year jumbo locked at 5.305. The FHA loans, 5.428. USDA loans, 5.34. And the best loan on the market for those that earned it, the 30-year VA loan, 5.428. That's where the loans actually locked at last week on Friday. Yes, I know that the Freddie Mac number came out on Thursday, but we just gave you the actual numbers for what happened on Friday. So just throw that out there for you. You want to know that stuff. This is reality. This is where the loans are locking at. You know, you can go, and this is on average, and it's a company that's got 35% market share. So they know what the numbers are, and it's all technology. So they can just hit a button and say, okay, what's the average? Boom, we got it, 5.452 on a 30-year conforming loan. And if you haven't seen the graphic yet or the posting yet, well, the team just finished this. So a loan that closed last week, I think it was last week, maybe the week before, our team did a great job. They closed in 7 days from the day they got the contract until the clear to close. 7 days is what the team did that in. And they actually did it at 1.25% below the OBMMI number. So when you look on here and you see conforming at 5.452, the loan actually closed at 1.25% below whatever that was for the date that it happened. Now, the question becomes, why is all of this happening? We need to understand not just what is happening, but why is it happening? And, last week we got the employment numbers, and the employment numbers came out very, very strong. But some of us looked at them and said, something just doesn't smell right. There's some fish here. And you get a little bit of time to do a little dissection of the numbers, and you wonder, okay, the business and household survey showed 528,000 jobs versus 179,000 for the household survey. So why is there such a big difference? The household survey flagged 168,000 decline in employment, 84% of which has been a loss of full-time positions. Business survey has shown a net employment gain of 1.68 million over the past 4 months. Both of these are over a 4-month period. What is the difference? Well, the difference is part-time work. Every time a person gets a new job, that's called a job creation in the BLS report. So if you have 2 jobs and you got a third, you just got another job. If you had no jobs and you got 2 jobs, 2 part-timers, you got 2 jobs. That's 2 jobs in that $528,000 job gains. So not exactly the rosy picture that the government wants us to think it is. Now you got 179,000 was the gain in the household survey. Yet we're seeing a lot of people that are just dropping out of the workforce. So that's another big issue when people just, they give up. They throw up their hands and they say, I'm not going to even try anymore. That's why you see the unemployment number go down, because they're no longer in the workforce, so they're no longer part of the calculation. When the numbers are more accurate, we might be seeing a different story. And now that we've got the Inflation Creation Act passed the Senate, hasn't gone to the House yet. They're expecting the House to vote on it on Friday. But there is a consumer price index coming out on Wednesday. If we see that inflation is hotter than it's been, do you think some people might question whether they want to continue spending more and more money? Just throwing that out there for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Josh, can we fit in our real-time real estate segment now, and then we can do our workshop on veterans? Good, we're going to do that. Real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. If you want to know the value of your property, just click on the 4th tab over in the middle of the home screen there. Put your address in there. It's going to give you 4 different values for your property, going from 4 different services that are part of this program. Shopping for a property, 97% of America. You can put in the desired area with parameters right there in the first tab. It'll give that information to you as well. Why the Forbearance Program has changed the housing market. That is the subject of the real-time real estate segment. When the pandemic hit in 2020, many experts thought the housing market would crash. They feared job loss, economic uncertainty would lead to a wave of foreclosures similar to when the housing bubble burst over a decade ago. Thankfully, the Forbearance Program changed that. It provided much-needed relief for homeowners so a foreclosure crisis would not happen again. Here's why forbearance worked. Forbearance enabled nearly 5 million homeowners to get back on their feet in a time when having the security and protection of a home was far more important than ever. Those in need were able to work with their banks and lenders to stay in their homes rather than go into foreclosure. Marina Walsh, Vice President of Industry and Analysis at the Mortgage Bankers Association, notes, quote, most borrowers exiting forbearance are moving into either a loan modification, payment deferral, or a combination of the 2 workout options, unquote. If you're watching us on RonSiegelRadio.tv, the ABC News and Talk AM 1490 video feed, or any of our social channels, you're seeing a chart right now that shows with modification, deferral, and workout options in place, 4 out of every 5 homeowners in forbearance are either paid in full or are exiting with a plan. They're able to stay in their homes. Loans upon forbearance program, 36.4% paid in full, 45.2% were workouts or repayment plans, 18.4% were still in trouble. And you can see that right on the chart. What does this mean for the housing market? Since so many people can stay in their homes and work out alternative options, there won't be a wave of foreclosures coming to the market. And while rising slightly since the foreclosure moratorium was lifted this year, foreclosures today are still nowhere near the level seen in the housing crisis. Forbearance was not the only game changer either. Lending standards have improved significantly since the housing bubble burst, and that's one more thing keeping foreclosure filings low. Today's borrowers are much more qualified to pay their home loans. And while the majority of home buyers are exiting the forbearance program with a plan, for those who still need to make a change due to financial hardship or other challenges, today's record level of equity is giving them the opportunity to sell their houses and avoid foreclosure altogether. Homeowners have options they just didn't have in the housing crisis when so many people owed more on their mortgages than their homes were worth. Thanks to their equity and the current undersupply of homes on the market, homeowners can sell their houses, make a move, and not have to go through the foreclosure process that led to their housing market crash in 2008. Thomas La Salvia, chief economist with Moody Analytics, states, quote, "There's some excess savings out there, over $2 trillion worth. There are people that have ownership of those homes right now that even in a downturn, they'll still likely be able to pay that mortgage and won't have to hand over the keys, and there won't be a lot of those distressed sales that happened in the 2008 crisis," unquote. Bottom line, the forbearance program was a game changer for homeowners in need. It's one of the big reasons why we don't see a wave of foreclosures coming to the market. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to give them our number, 800-306-1990, 800-306-1990. That's the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Hey, and if you got a lot of equity in your property and you got a lot of debts on the books, here's the threshold. Interest rate at or above 3.5%. And if you have or debts above $30,000. The higher your debts are, the lower your interest rate will be. Give us a call at 800-306-1990. We'll put that information into our blended rate calculator, and we'll let you know, maybe even though you have a 3.5% interest rate, maybe you can save money every single month. That's just a thought for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, VA eligibility, we're going to talk about it. There might be a surprise for you in there as well. Speaking of foreclosures, short sales, forbearances, all of that. Should you buy a house with a high mortgage rate? Again, all that and more. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. So as you know, I love our veterans. We support our veterans. We do a lot of different things around the area and all year long, supporting our veterans and the veteran community. And I went through last year and got certified as a veteran mortgage advisor. Went through a course, a lot of hours, a lot of great information. And I get on a call with some of the other folks around the country that are part of this group and chat about, learn about what's going on in the world of the veteran world and what are some of the biggest concerns, questions, and myths. So today we're going to tackle a myth, or maybe just educate you on the issue. VA eligibility. Who is eligible for that VA loan? So we got a group of people, obviously veterans. So what are the service requirements? So if you're in World War II, September 15th, 1940 to July 25th, 1947, 90 continuous days. Peacetime, 181 days. That was from in the late 40s as well. Korean War, 90 days service. Post-Korean War, 181 days. Vietnam, 90 days. Post-Vietnam, 181 days. That would be in the May of 75 to September of 80. Got another one for post-Vietnam from September of 80 to August of 92 years service. Persian Gulf from August 2nd of 1990, and that's undetermined when that one will end. 2 years or a period called into active duty, not less than 90 days. So that's your eligibility on the Persian Gulf. Other eligible persons, active duty members, 90 continuous days, 181 during peacetime. Active reserve or National Guard, 6 years selected reserves with 16 points. Unmarried surviving spouse, no time requirement. Veteran must have died on active duty or from a service-connected disability. POW, MIA spouse, veteran must be in POW or MIA for 90 days. Those are the basics of who's eligible. Now, one of the things that we talk about in the group, the key to the whole thing is the certificate of eligibility. Certificate of eligibility. And if you're talking to a lender and they're saying, "Oh, we know VA loans inside and out," ask them if they ask them when they're going to be pulling the COE, certificate of eligibility. Right? That's a big question. If they've asked you for the DD-214 and you're still active, you might want to scratch your head a little bit. Just throw that out there for you. Common myths. You can only have one VA loan at a time. Not true. If you foreclosure on a VA loan, you can never have another loan. Well, let me go back because I'm missing some things right here. Yeah, that's not true either. The VA has a maximum loan limit. Can we get that buzzer one more time? So those are myths. We're going to start working on dispelling some of these myths right here, right now. So you can only have one VA loan at a time. That's not true. So what if you got a loan and your service location has changed? Maybe you need to get another, you want to live still, and it's a little bit of a commute if you were transferred from Texas to Camp Pendleton. Maybe a little difficult. So yes, you can have more than one loan. There's two different sets of entitlement. You've got your basic entitlement, then you've got your bonus or extended entitlement. Got to understand both of those. Basic entitlement is really just what it says. It's a $36,000 entitlement, a guarantee. So that's basically for the first $144,000 of loan amount. I know that's not getting you a whole heck of a lot here in California. Our prices are just a little bit above that. But what about the bonus entitlement? Yeah, you can go above that. You can get more. You can almost go unlimited. Depends on the lender and their lender overlays. But the VA basically says you can pretty much go unlimited. And there are calculations out there. We understand the calculations. Our team understands the calculations. I actually wanted to confirm with our tremendous underwriter. So I did send her a message this morning And this is the reason why we're able to get loans, as I mentioned to you earlier, with cooperation, contract to clear to close. I think the one that we're just promoting is 7 days. Does it happen that way all the time? No, but it can if we really need to. So I do know of a situation where a gentleman, in this case, had a VA loan while he was active duty. He was in Virginia, I think, or East Coast somewhere, maybe in the Carolinas. And he ended up short selling the property when he got his dishonorable discharge because he moved back to California. And so my question to our tremendous underwriter, Lori, was what happens in this case with how much of a loan to value? What is their amount that they can get when they move to California and want to start their life, their career outside the military? Well, again, based on eligibility, this is not an offered loan, but she's told me that we've been able to get 100% loan to value, even though there was still that short sale that was done 10 years ago, 8 years ago, something like that. So be aware, not everybody understands the guidelines as well as everybody else. It's like every other situation. There are people that are extremely good at what they do. There are people that talk about what they do. So just a little bit of a word to the wise right there. If you are a veteran or a military spouse and you think you've got eligibility, give us a call, 800-306-1990, 800-306-1990. Our team can take care of getting the answer to that real quick. It's not a long process to find out if you've got that eligibility available and how much eligibility you have. So we've got the calculator. I'm not going to go through the whole calculator with you on there. If you foreclose on a VA loan, you can never use it again. I think I just dispelled that myth. Yes, you can use it again. A lot of people think that, well, whatever you owed the VA or whatever the amount was that they had to pay on your behalf, that's taken off of your eligibility. Well, Lori tells me that may not be the case in all situations. And she's already had that. Used to be that it was pretty cut and dry when you had a limit. County lending limit was the limit that you could do on your VA loan for 100% loan to value. You could always go higher than that. You just had to pay a fraction of the difference above that. No, it's a different calculation. I'm not going to go into it right now because there's no need to. That rule has changed. So we're not going to deal with that part of it. What is the VA loan guarantee? Basically, what the Veterans Administration is doing for eligible veterans or active duty, is they're guaranteeing that top 25% of the loan. So if you've got $1 million loan and you want to go in with no down payment, what the VA is saying is 25%, $250,000 of that, they will guarantee. Why? Well, because they make the assumption that if you don't pay, the VA is going to pay that 25%, and the lien holder can liquidate the property, recover the difference. Now, if they liquidate and can liquidate it for 90% or 80%, the VA is going to cover the shortage to get down so that they have that to the 25. So in the instance of 90%, you sell it for $1 million property, sold for 900,000, or short sale, went to foreclosure, went for 900,000. Well, the VA is on the hook for 150,000. The lender's going to get back their full 750 that above that. That's where the numbers come in from. Just want to throw that out there for you. So the VA is protecting the lender to make sure they get whole. That's all it is. They're going to the lender's not going to make money on it. They're going to get whole. So I think I said that wrong in that last one. If they sell it for 900,000, then the VA is coming in with the extra 100 to make sure they get back to that $1 million mark of what they lent the money on. So the bottom line there is, again, I just want to make sure the VA is there to make sure they're whole up to a 25% amount. So that's where those numbers come from. Restoring eligibility. So yes, once you sell that property, your eligibility goes back. The VA loan is assumable. Ideally, you want to have it assumed by another veteran who's using their eligibility. So once they take over your loan with their eligibility, Well, now you got a big benefit, a beauty there, because it's going to restore your entitlement, and it's going to use up a little bit of their entitlement, or whatever amount of their entitlement is still remaining on that. So you want to make sure that you get that to posted on WebLGY or form, again, 261880. Want to make sure that that gets done so that you get your full eligibility back. The VA loan is not meant as a investment program, but some people tend to use it that way. So again, in that scenario I used before, you're in Texas and get transferred to California, you could keep that property in Texas and rent it out. Maybe you'll make some money on it. Maybe it'll appreciate. Come to California, use the bonus eligibility, and you continue using that and you continue benefiting. So now you've really got two loans. Now the idea here is, don't go and buy a $250,000 condo in Orange County with your VA benefit. Wait 2 years, do a new loan, conventional loan, and use your VA eligibility, and then do it over and over and over and over again. That's not what it's geared for. So we want to make sure that you're checking with us on those type issues to make sure that we get you all the right information. Now, we do have some other topics that we're going to be getting into in the days and weeks to come. BAH, changing station, and residual income on your VA loans. But that's just a little bit of VA eligibility. I call it 101. We didn't go deep. Just gave you a little bit of a higher level. And if you want to go deep on that, give us a call, 800-306-1990, 800-306-1990. We'll get you specific information from our team. You're listening to Ron Siegel Radio, discussing real estate, current events, and the financial markets. When we come back, should you buy a house with a high mortgage rate? And maybe we'll talk a little bit about re-entering the home buying market, all that and more. You can reach me anytime, off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by the National Institute of Financial Education. We're out there just trying to educate our community, one individual at a time. National Institute of Financial Education. Should you buy a house with a high mortgage rate? That is our subject today. Learning the mortgage rates have gone up can feel like a dagger in your homeownership dreams. Your mortgage rate affects your monthly mortgage payment, the total interest you pay, and how much house you can afford. So naturally, it's worth considering whether buying a house at a high interest rate, more specifically, financing a house at a higher interest rate, is a wise move. How a 5.7% APR compares to a 2.88 APR. If you purchase a $428,000 home, yes, I know you're talking the Inland Empire, but you can double these numbers if you want. With the 3.5% down payment at a fixed APR of 5.7 over 30 years, your mortgage payment would be $33.37 each month, including private mortgage insurance. Actually, that might even be the mortgage insurance premium. By comparison, financing at 2.88%, The median rate in mid-July 2021 would put your payment at $26.55. At 5.7, you'd pay a total of $449,961 in interest over the life of the loan. That's double what you'd pay if you financed at 2.88%, $204,000, and more than the cost of the home itself. What a higher mortgage rate means: increased costs are the most obvious effect of higher mortgage rates, but that's not the only factor to consider. You may have to adjust your budget or your expectations, or both. Most lenders expect your total debt payments below 36% of your monthly income, so you may have to shop for a lower priced home than you initially planned, or call us at 800-306-1990. We may have a different solution for you. Some lenders may stretch the debt-to-income ratio to 45% if your finances are strong, like you have a bigger down payment, low debt, and good income. You still may have to make some sacrifices. Spending more on your mortgage could affect your other financial goals, like saving for retirement. Since your mortgage rate is partly based on your FICO score, maintaining good credit could help you buy a home. Consider taking some time to improve your credit so you can qualify for a better rate. Moving into a higher credit tier could shave hundreds off your mortgage payment and save on interest. Hard to predict what will happen to home prices, but also note that falling home values, particularly in the early years of home ownership, could put you upside down in your loan. When you owe more than your home is worth, selling or refinancing is tough. Plus, you wouldn't have access to home equity regardless of how many payments you've made. Renting may be more favorable for now, do you think? Some people think of renting as throwing away money or paying the landlord's mortgage. It is, but it's not always that simple. Renting could make more sense financially when rent is lower than your would-be mortgage payment. If you continue renting, you can take advantage of the cost difference by putting the surplus aside each month. This preps you for a higher mortgage payment and creates a cushion for unexpected expenses. Even when the numbers line up, buying is more beneficial than renting, only if you stay in the home for a certain period of time. Selling too soon can wipe out your gains. Lower the cost of a high note. Every home buyer's situation is different, so you have to weigh the costs and benefits to determine what's best for you. If you run the numbers and decide to move forward with your purchase, you have a few options to soften the impact. Number one, make a bigger down payment. Because you're borrowing less, you'll pay less interest over the life of the loan. Opt for a shorter term. Don't do that. Paying your loan back sooner lowers the interest you pay, but you'll have a much higher monthly payment. Buy down your interest rate. The lump sum payment can lower your interest rate and monthly payment, but only to a certain limit. Ask your lender about no-cost loan options. This won't lower your rate or payment, but will lower the overall cost of buying a home. Keep your finances strong. If you're locked into a high APR and rates drop, financing is an option, if it makes financial sense, of course. As always, get your FICO scores, know what they are, from myfico.com, myfico.com. Shortening the term. I want to just go and touch on that one just a little bit further. The idea of shortening the term on your loan is not a good idea. The idea of shortening your term by just increasing your payments is a good idea. You're dealing with you're dealing with the amortization table when you're doing it that way. And I like the idea of dealing with the amortization table just because that helps you in the long run. You can make a larger payment. You're getting more equity. Those are all good things. The thing that bothers me is when people go and get tied into those other loans, the shorter term loan, and you have uncertainty, because what happens if you can't make that larger payment? You're still on the hook for it. That's not a good idea. So pay it early. That's fine. Also remember that if interest rates go down, now don't look at the interest rate, the APR you got 2 years ago. What was the interest rate you got 2 years ago? They may not be the same. They're generally not the same. And if you're looking at the APR now, that may not be the wise idea. Look at the interest rate versus the interest rate, and then look at costs and what's the break-even point. The break-even point is not the time just dividing the payment by the cost, because part of that payment is just going into your savings. It's the interest saved divided by cost is what you really want to be looking at. So that's the Borrow Smart segment. brought to you by the National Institute of Financial Education. And speaking of this concept of, did you wait too long to get into the market? How about a little bit of a, I don't know, we'll see if how this goes, Josh. We might want to make this into a workshop as well. Borrow the reentry idea of getting into the marketplace. You sold your home a couple years ago because you knew that prices couldn't keep going up, but they did. And now you're looking and saying, well, I wish I had. I wanted to buy. So let's just take a look at what the market looks like right now. And we're just going to use a hypothetical $900,000 purchase. And, you know, being that I'm doing this on the fly, I'm just going to throw this out there. And we're going to give you some parameters for this. I don't know if we're going to be able to put it up on the screen because I throw these things at Josh real quick. But he is a magician in the background there. So he does sometimes get things onto the screen that we didn't think we could get on there. But let's take a look at this Borrow Smart. And I'm going to word you through this whole concept. So let's word through it and see what happens. And let's chat about this. So we got a $900,000 purchase. Oh, Josh got it up there. So if you're watching us or want to watch the replay, $900,000 purchase. Today's interest rate, not exactly. When we put this together, it's not the same today. It's lower. But looking at a loan amount of $720,000, well-qualified borrower, great credit, not an offer to loan, just an educational piece. So when we did this a couple weeks ago, interest rates were at 6.25 APR, 6.343. All-in payment, $5,500. Funds to close was $193,849. But you say, you know something? I don't know. I was looking at a $5,000 payment, and I can only afford a $5,000 payment. How do I make this work? You're going to be surprised when I tell you the way to make it work. Increase the price. You're going to increase the price to $930,000. The loan amount goes up to $744,000. But if the loan is structured properly and you talk to the seller and you say, Mr. or Mrs. Seller, I'm going to increase the price by $30,000. I need your help. I need you to use that money to buy down my interest rate for 30 years and do it in a way that's not going to trigger high price and predatory lending violations. Well, we know how to do that. Our team knows how to do that. So got to bring us into the transaction early on so we can help. We're going to lower the interest rate by 1.5 points down to 4.75. 5.217 is the APR. Again, these numbers from a couple weeks ago, they're probably lower today. Payment drops to $5,000. The cash to close went up by about $7,500, $201,377. Okay, now what about the idea of is there anything more that we can do? I can't find what I want at 930. That didn't work. Well, what if the $5,500 payment worked, but you couldn't find the property that worked? So if you're watching us on RonSiegelRadio.tv or any of our socials, look at the third column, or you can just call us and we'll send this presentation to you. I think we're going to put it up under rsrreenter.com, rsrreenter.com. Josh, we'll have to work on that. But what if we say, okay, we're going to bump it up, go to $1,050,000 purchase price, $1,050,000 purchase price. How do we do that and still keep the payment the same? Well, we're going to ask the seller, again, we need you, Mr. and Mrs. Seller, to put $30,000 toward a 30-year payment reduction program, payment assistance program. So we bring that APR back to 4.75. I'm sorry, we bring the interest to 4.75. The APR is 5.21. Now we're back at that $5,500 loan amount that we were initially at the $900,000 and 6.25% interest rate. So we did bring our down payment, our cash to close, $229,000, call it $230,000. But now we've increased our purchasing power to $1,050,000 and kept our loan amount the same as today's $900,000 loan amount. all by understanding, again, how to structure the purchase properly. Got to bring, again, our team in early because we do not want you to trigger high cost and predatory lending violations. We don't want that. So if the contract is written properly and precisely, we can get around that, or we know how to navigate that. Just has to do with our experience in doing these things. Now, one more thing that we want to look at, I didn't look at this one. If you scroll down on the presentation to a 15-year time horizon, under today's rates, at that $900,000 purchase price, you're looking at $595,000 in interest over 15 years. You're going to save about $140,000 with the payment assistance program just by going and increasing the purchase price and the down payment a little bit and getting the seller's help on that payment assistance program. And even if you go to the $1,050,000, you go up and get that payment assistance, you're going to save $83,000, rough numbers, in the interest. So when you think about it, I just showed you two different ways to raise the purchase price and save a lot of money. Who else is telling you about that? Call us 800-306-1990. Our team is well schooled in this scenario. And as always, I ask you, set that first radio preset button to come back here and join Ron Siegel Radio every morning, every afternoon. Our socials and on KABC AM 1490, the video feed. Come back and join us. Set that first radio preset button. As always, we thank you for spending a little bit of your day with us. That's all for Ron Siegel Radio. If you want any more information on anything we talk about, give us a call, 800-306-1990. Thanks to all of our sponsors. Thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. Again, that's all for Ron Siegel Radio, 800-306-1990, 800-306-1990. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.